How to avoid stock trading volume mistakes like a pro. How to avoid stock trading volume mistakes like a pro. We are on a monthly chart of Indo International PLC. The EPIC is ENDP, Eco November Delta Papa. This is a Russell 1000 component. And we want to discuss how to avoid stock trading volume mistakes like a pro. In this tutorial, I want to share with traders two specific examples of a stock trading volume scenario where traders very often will get into trouble. In order to avoid getting into trouble, we will show traders in this tutorial exactly what is happening, all right? So if you look on this chart, we have, so when you are trading the first thing first, traders very often, the first mistake that traders are making, they are trading the trading volume. So they will be trading average volume. So you see here, I have here on my chart, whenever you plot on your chart the volume bars, you need to place also on your chart the moving average 50 of the volume bar. This is very important for us. This allows us to see, okay, the surge in trading volume, volumes that are well above the average volume. You can see that the average volume here, if I draw a line here, you can see that the average volume is around 54 million shares, okay, for this stock, Indo International PLC, okay, the average volume is 54 million shares. So in order to trade the stock trading volume like a pro, one should concentrate on the volume spike. So the volume spike is alerting us that there is a surge in trading activity in that particular stock. Also, if there will be a trend, there will be first a surge in trading volume, all right? But sometimes traders get into trouble. So here we have, here you can see that this volume bar here, hold on please. This one here, you see this one here, this tall volume bar. That's what we are talking about. This is a surge in trading volume well above the average volume. This is why you want to pay attention to. All right, so you can see this one is it's not quite significant. This one is not significant. If you want to trade, this one is all right. Okay, one can concentrate. This is up to how long? 135 million shares, this particular volume bar here. So the average volume 54 million shares. Now you have 154, okay, million shares being transacted in this particular candlestick bar here. You want to know what is happening. In order to avoid stock trading volume, one should also, okay, assess where this volume spike is trading place. All right, so if you pay attention to this one here, there is another volume spike here, the one of 135 million shares, this one here. You want to pay attention to where the volume spike is taking place. Well, pay attention to this one here, this one, okay? So if I place a vertical line there, you will see the volume spike did occur during this particular month here, okay? See this candlestick bar, that's where we have the volume spike. Look what has happened. Look exactly where that volume spike did take place. It takes place when the price did below, okay, this bullish trend line and was retesting it, okay, this particular month here. All right, this is the month of, which month is this? Where are we? We are in 2015, September 2015. That's exactly when the price did retest, okay, breaks below, okay, this trend line and was retesting here on the monthly chart, and we have a volume spike. All right, so the place where the volume spike did take place will also give you a bit of information what is taking place. Because if you see a volume spike, you want to ascertain whether, okay, those are buyers or sellers. So if you look at this chart here, the price D below the bullish trend line here was retesting it. The first thing that should come into your mind is that probably those are sellers because the price D below this bullish trend line. So in order to avoid stock trading volume, it's very important to pay attention to the point or the place where the volume spike did occur. Okay, so the place where the volume spike did occur will give you a bit of idea what is happening. Okay, did the volume spike take place at a resistance level? Did the volume spike take place at a support level? Did the volume spike take place during a consolidation? All right, those are the things you need to pay attention to avoid, okay, trading mistake. So if you pay attention to this candlestick bar here, I'm going to go to the weekly chart. You will notice the volume spike on a monthly chart. If you want to ascertain what is happening here, you can go after the candle is closed, go to the weekly chart. Okay, here it is on the weekly chart. Here it is. Yes, we are in September 2015. All right, look at this candle. Let's see. Now this is October. This candle here is the first week of October 2015. So all this time, okay, so in fact 1, 2, 3. So let's see this one here. Okay, let's see this one here. All right, so we see all the price action here, this candle here. Okay, let's zoom into. You see all this section here. 1, 2, 3, 4. Okay, this is the first one. 1, 2, 3, 4. There was 4 candlestick bar in this session. This is the month of September 2015. See what the price was doing here. The price did, you can see that the price touched the trend line, found the support, went above that trend line, pulled back below it, went back above it, so, and then it come back down. All right, so look at this. There was one bullish candlestick bar was made by sellers, and again a sellers. Now we have another bullish candlestick bar on the weekly chart, and again we have sellers down. All right. So with this information, what is coming to my mind is that probably those are sellers. And then I will implement a top-down trading method to trade it. All right. So the place where the volume spike is occurring will alert us or will give us a bit of idea what is taking place. And this will allow us also to avoid stock volume trading mistakes. Let's go back again to the monthly chart. So we have done it. This one candle, this volume spike here is happening when the price closes below the bullish trend line. So that volume spike here, okay, in the month of September were sellers, and you can see that the price was going down. Okay, so those who sold it here were in the trade all the way down here. So look at the second volume spike. I want to zoom into it. So here it is. We see another volume spike. This is taking place in the month of May 2016. So last month, okay. So because we are now in June, okay, we are now in June 2016. This is June 2016. All right. So last month we see another volume spike. So the average volume, as you know, was 54 million shares. Look at this one here. It went up to which level? 272 million shares being transacted. Okay, so to avoid a volume spike, a trading mistake, okay, you want to ascertain where the volume spike did take place. So let's start putting some line on the chart. So professional will always trade around key levels. All right, pay attention. All right, so that's where you see here the price breaks above that key level, this level of $15. Retest it here. All right. Remember that the small money will buy or sell at a specific price level. So the price break above that key level, retest, found the support here, went up, okay, pull back again, retest that the same key levels, all right, and then from there it went up, and since then it didn't touch it. Here it is, it come back down to the same level. But each time the price touched this level, people bought it, and then it went up, and then pull back again to the same level. And as soon as the price touches this level, people are buying. So the smart money is buying this stock at Indo International PLC at $15.18. So here there is another scenario here. You can see After they sold it from this volume spike, the first volume spike here in September 2015, the price went down. Now the price going down for a long time. All right. Now here it is. We have another volume spike, more than 272 million shares being transacted in the month of May 2016. Are they buyers or sellers? By looking at the place where the volume spike is happening, the first thing that is coming to my mind is that probably those are buyers, because they bought it here, they bought it here. Now the price is also here. Another thing I want to share with traders in this tutorial about how to avoid stock trading volume mistakes like a poro is that look at this. This is very, very important, okay, tips that I want to share with you. If the price goes down very fast, okay, so you see it went down fast. You see the size of the candle. Those are long candlestick bar, long candlestick bar, long candlestick bar. So which means if the price goes down very fast with a high volatility, how do we know there was a high volatility here? The size of the candle are telling us that there was a high volatility here, because they are, or you can see long candlestick bar is telling us high volatility, high volatility. So if a stock, okay, goes down very fast with a high volatility from one key level to the next key level, and at the end of that move we see a volume spike, is usually alerting us that the price has a high chance to reverse. Did you get it? If a stock goes down, all right, this is something the hedge funds are using in the stock market. Price goes down very fast, so high volatility is usually followed by what? Low volatility. So if the stock goes down very fast with a high volatility, and at the end of that volatile price move, we see a volume spike, the first thing that is coming to our mind is that probably there will be a reversal. But also, we are paying attention to where the volume spike did occur, is occurring at the support level. What has happened before? So if you see a volume spike at the support level, does not mean buy. But if the stock goes down very fast with high volatility to a support level, and we see a volume spike, the first thing that should come into your mind is that they are buying again. Okay? The opposite is also true. If you see a stock going down very fast, so price goes up from one support level, okay, and now it goes up to a resistance level. Now you want to ascertain how the price went up. If it goes up very fast with high volatility, so you want to see long candlestick bar, long candlestick bar, long candlestick bar, okay? So it's volatile, all right, from one support level to a resistance level. So now that the price is at a resistance level, if we see a volume spike, the first thing that should come into your mind is that there will be probably a reversal. But you do not assume anything. To avoid nasty surprises, all right, in trading, we want to use always a top-down trading method. All right? If one is not using a top-down trading method, one is not trading like a pro. All right? So to avoid the stock trading volume mistakes like a pro, remember this, price goes down very fast, long candlestick bar with high volatility from a resistance. The resistance in this case is the trend line. You see the volume spike here. So those who are selling here, all right, are coming out here. So you want to understand that. So those who sold it here with this volume spike, in the first volume spike, they are coming out here. And not only that, they are met also by buyers. So they are coming out, their volume spike is in this volume bar, plus the new buyers or the same people that are buying again at the same key level. But now, you don't just go and buy, you will implement a top-down trading method. So at this point in time, we'll say to trader, priority to bullish signal above 15.18 and priority to bearish signal below 15.18. One is trading first the market before this financial instrument. So if you are trading stocks, you must pay attention to the market, which is the S&P 500. So you may implement your strategy carefully. So at this point in time, we'll put this stock on our bullish watch list. If the stock market is bullish, the market environment is bullish, okay, we'll implement a top-down trading method to trade it. This is about how to avoid stock trading volume mistakes like a pro. I have one more example I want to share with you. So remember this, the place where the volume spike is taking place will help us to determine whether they are buyers or sellers, will help us, okay? Right? I have been recording more videos at dayprotrader.com, so check it out. A lot of video. There is a playlist about volume stock analysis at Daypro Traders YouTube channel. So I have been talking about other things before, so this is one more thing I'm adding to it. So this is not the whole thing. This is one of the things that I've been talking about before, how to avoid stock trading mistakes, all right? One more example, then I will wrap it up very fast because we don't want the video to be long. Another stock that I wanted to show you is NVIDIA stock. Okay, so if you are using computer, NVIDIA, okay, it's a technology company. So there is one volume spike here. I want to show you this one here. So pay attention, all right? So here we have the average volume for NVIDIA. You can see in this section here, I'm talking about from here, from where my cursor is, up to this volume spike here. So the average volume was 400 million share, okay? Suddenly, we see this volume spike here, this one here. Are you with me? All right, we see this volume spike here, all right? Look, so at that point, we have how many share? 824 million share. So double the average volume. This is a volume spike. All right, it's a volume spike. But look carefully. After that volume spike, so the first thing you want to ascertain to avoid stock volume trading mistake, where did that volume spike did occur? All right. Okay, the volume spike did occur right here. So at the opening price of this candle, during this candle, you can see this candle. So, all right, so this was a resistance level. Price breaks above that resistance, went below it. Price found a support on that level. But from that point onward, after the volume spike, the price went to a resistance level. So what I want you to remember is that pay attention to, okay, so this volume spike will be in place after this candle is closed, all right? So we will see this low volume spike at the end of this particular month, the month of January 2011. So after this volume spike, you can see that the price was at a resistance level. All right? Which resistance? This one. So the place where the volume spike did occur, in this case, is what? Is a resistance level. Because that candle is now closed, and we see this volume spike. So we will be wondering, are they buyers or sellers? Because this volume spike did occur at a resistance level, the first thing that should come into your mind is what? Probably they are selling. But if you want to buy, the price must go above that resistance level, find a support, break above, retest, turn around before you can buy. But on that particular day, at the end of that month, as the price went up, closed at a resistance level, now we see a volume spike. All right? But the next thing, as I told you also, look at the size of this candle. Will you agree that this is a volatile candlestick bar? It's a long candlestick bar. Remember what I told you before in the first example, okay? Volatility. So again, in this candle, we have a volatile candlestick bar. So price went up very far that particular month, and it reaches a resistance level. And then we also have a volume spike. So volatile price move to a resistance level, we are thinking of reversal. That's exactly what has happened here, and the price went down. But we will not just sell. So all we will say to traders is a priority to bullish signal, priority to bearish signal below 2501, and priority to bullish signal above 2501, provided that the price found a support above that level. So here, a volatile candlestick bar brought the price to a resistance level. Okay, volatility, high volatility, volume spike, price at a resistance level. We are thinking of a reversal to the downside. Okay, high volatility, price went drop down, as you can see. I showed you in the first example, drop down very fast. High volatility reaches a support level, and then we have a volume spike at the end of. So what has happened? You see here, this is only one candlestick bar. In the first example, you see many candlestick bar, and at the end of the volatile price move, we see, okay, a volume spike. This is one example again. So Let's go back again to the first example, which I show you, the Indo, okay, International, the EPIC DP, ENDP. All right, here it is. So here it is, see volatile, not one candle, but the example that I showed, the second example, we see only one candlestick bar that brought the price from one support level to a resistance level, and we see a high volatility and also plus a volume spike, reversal. Okay, use a top-down trading method, as I explained to you, priority bullish signal above, priority bearish signal below. So here we have many long candlestick bar, but at the end of that price action, suddenly we see a volume spike. But the second example, it was only one candlestick bar, okay? You get a message? So this is the end of this tutorial about how to avoid stock trading volume mistakes like a pro. When a price moves up from a support level to a resistance level, and we see a volume spike, there's a high chance that there will be a reversal. Okay, if the price goes down from a resistance level to a support level, and at the end of that price move, at the time when the price is reaching, very important, at the time when the price is reaching a support level, if we see a volume spike, the first thing that is coming to our mind is that we will have probably a reversal. So to summarize this video, to avoid stock trading volume mistakes like a pro, one must assess where did the volume spike occur. The next thing one should also check is the volatility. How volatile was the price action? The next thing one should do, one should not just buy or sell, one should implement a top-down trading method. One should also draw a warning line, as I did here, the first example and the second example. Always draw a warning line after the candlestick bar is closed. So you're on a monthly chart, that candlestick bar is now closed, and we see a volume spike. So if we were in May, we cannot talk about it here. We wait until that candlestick bar is closed. Now it's closed. Now we will implement a top-down trading method here. If you have any question or suggestion, put in the comment section, and in due course, I will record another video to answer your specific question. We are the TSTW24 traders, talking about how to avoid stock trading volume mistakes like a pro. Happy trading to you all, and I'll speak to you soon.